I'm Michael Yardney, and it may seem obvious, but I guess I've got to start with it. In order to create long-term wealth through property, it's going to be important to own the type of property that'll be in continuous, strong demand from both owner-occupiers and tenants in the future. And that's why some recent population statistics from the Australian Bureau of Statistics are instructive to property investors. So let's have a quick look at what these things are. First of all, how fast are we growing? Over the year to June 2011, the country's population was estimated to increase by about 1.4%. Now that's faster than almost every other developed nation. However, population growth was stronger in our capital cities than in regional areas. Since 1996, there's been a steady increase in the proportion of the country's population living in our capital cities. And given that capital city markets tend to enjoy higher wages and have better job opportunities, I think this trend is likely to continue. Today, around 64% of our population live in 8 of our capital cities. In fact, about 61% live in the 5 big cities: Melbourne, Sydney, Brisbane, Perth and Adelaide. So what does this mean to you and me as property investors? Look, I understand why some property investors are attracted to investing in regional Australia. They can see that properties are cheaper there, and some may even return a little bit of positive cash flow. While some better performing regional areas have outperformed the poorer performing capital city suburbs, the trend is clear. In the long term, population growth, and therefore capital growth, is going to really happen more in our capital cities, in the major cities. And that's going to eclipse the growth in our regional Australian areas. Look, I've always avoided investing in regional towns because they're heavily reliant on 1 or 2 industries. And remember, those industries, when they take a battering, it's not long before local house prices bear the brunt. So instead, I look to invest in areas where property values are going to be driven up over the long term by a large and growing population base, by a diverse economy, and by scarcity of supply of well-located properties. While there's no doubt that the future of our population growth in our capital cities is going to create infrastructure problems and I guess some social problems, the fact is we all want to live in the same cities, and in general, in many of the same suburbs. And that's what's going to underpin capital growth in these locations. Interestingly, how we want to live is also undergoing some radical changes, which means the type of property that's going to be in strong demand by owner-occupiers and by tenants is going to be a bit different in the future. See, in the year 2010, around 150,000 new households were created in Australia, and approximately 65,000 of these, well over a third, comprised Gen Y singles, groups and couples. Many chose to rent in shared accommodation in order to reside in those locations that they favour, ones they couldn't afford to buy in. These include the inner ring suburbs of our major CBDs, where employment opportunities and a fast-paced lifestyle with lots of recreation and entertainment facilities are their primary attractions. They want to live today in a way that's very, very different from their parents. If you look at it, people are getting married later today, and apartments suit their busy lifestyle. We're working longer hours, we're increasingly time poor, and we're starting our families much later in life. This means proximity to work, transport, entertainment, cafes, shops and beaches is becoming much more important than owning a big block of land. With the number of Gen Ys looking for accommodation continuing to rise, rental demand for near city and inner city and inner suburban accommodation, apartments, is going to grow significantly in the coming years. And you know what, our old friend of the supply and demand ratio is going to make sure that rents keep percolating up for these type of properties. And so will their values, as high yields are going to entice back owners into the market, investors in the market, and lifestyle is going to attract owner-occupiers. So our rising rent is going to mean that investors come back, and some tenants are going to consider, hey, maybe I should buy, and they're going to underpin property values as well. Putting all this together means that in today's market, apartments make great investments. And in general, they appreciate in value equally if not more than houses in our capital cities. It should be fairly obvious by now that more single households, two-people households and smaller families are going to be the continued trend in the long term. With housing affordability remaining an issue, we're seeing an increasing popularity of medium density apartment living, and this trend's likely to continue. But it's much more than affordability. As already explained, significant changes in our population profile and our lifestyle priorities are creating a strong demand for apartment living. At the same time, apartments are continuing to improve in design and size, and they're generally closer to the CBD than affordable houses. Now you think, I've talked about Gen Ys and the young people, what about the baby boomers? Well, let's not forget the baby boomers, because as they move into retirement, they're also going to significantly increase the demand for townhouses and apartment living. They're going to be looking for low maintenance lock and leave living. According to RP data, capital city units and apartments only accounted for about 25% of all the sales 15 years ago. Today, though, they make up closer to 35% of all home sales. Now, that's an interesting statistic, isn't it? So in summary, if you're looking for a great investment property, you should seriously consider well-positioned established apartments in smaller boutique blocks, not those big high-rise apartment blocks, and in the inner ring suburbs, not the inner city, but the inner and middle ring suburbs of our capital cities. Not any apartment will do. Look for a property with an element of scarcity and maybe the ability to add a bit of value through renovations. Then hold it in the long term and reap the rewards. Now, if you're ready to get ahead of the pack and make the most of your property investments, I recommend you join me for my 3-day annual property renovations and development workshop that I'm going to be holding in October. It's Australia's longest running advanced property training. It's going to be your chance to invest 3 powerful days and learn the renovation and development strategies that experienced property investors are using around Australia to manufacture capital growth. That gives them capital growth and strong rental returns, so you get the best of both worlds. You win in today's challenging environments. Please take your property investing to the next level. Click on the link below and you're going to find out all about it, read about the bonuses and my money back guarantee. I'll keep you updated in between my weekly newsletter with daily blogs as well. So keep informed by subscribing to my daily blog. By the way, if you want to find out a bit about what's happening in your capital city, no one can quite help you like the independent investment strategists at Metropole Property Strategists. Remember, our multi-award winning team have no properties to sell, but their advice is independent and unbiased. So if you want to find out a bit more about what's going on in your local market, why not join us for a free briefing in Melbourne, Sydney and Brisbane, or with our associates in Perth. Almost got that wrong, Perth. Look forward to keeping you updated with my weekly newsletters. Catch up with you at my property renovations and development workshop in October.